So, what's going on, guys? Here is a look at the US 30 chart. Now, we have been on a rally ever since last year, March, since the COVID incident. Now, let's check the email real quick. So, we are here basically. What's going on? We are here at the 200 EMA levels, which means basically this is something that doesn't happen too often, but as you can see, sometimes it does. Now here after this rally, we retested the 200 EMA like twice, and sometimes after we see a retest, we go lower, or as you can see here, we go sideways and reach the same levels a couple of times, which means if we were to form here maybe a third kind of leg, then we would have a similar pattern as we did here back in 2019. At the same time, we could still go lower or form a triangle, whatever, but for the triangle I think the bearish momentum wasn't too straight downwards, which means for now it looks like we will retest the 200 EMA once again, and if we do so, now the trade would be pretty simple, since we want to keep it always simple and go for a 1 to 2 risk reward. Now target would be the previous highs, stop loss would then be around here, so this would then be the trade for longer term. Now if we check the RSI, for example, here we can see that we were pretty low. Now we rallied a bit, which means we gained some space and could turn around again, which is what is happening right now. Now here we had the first bearish momentum cross. Now it seems like the second one will follow, which leads us to believe that we will still continue to go lower here. Now if we had the CCI, it has a similar pattern. We were pretty low. Now we went a bit higher to gain somewhat of a room, and which means we could still turn around here. If we simply add the MACD here, now the MACD is pretty low as well, but note that even on the RSI, the CCI, and now even on the MACD, we are forming here divergence, while this here seems to be a double bottom, which means we could actually rally from here. So watch out whether this second MACD will fall lower once again or stay here in this range. Otherwise, if we turn around, we could see a rally from somewhere here before retesting the 200 EMA. Now looking on the weekly chart, so it rarely happens that we retest another indicator, a part of the 20 EMA. So here we once retested the 100 EMA in October last year, and now we could retest the 50 EMA, which seems likely. So if that were to happen, the CCI could go lower, and here the MACD could see a cross somewhere to the upside. This is where my entry point would be. I mean, I would then look down to the daily chart and enter at a better point. So here we retested the 50 EMA. Here this was COVID last year, so obviously we broke below all the EMAs, but now this support line here is or could align perfectly with the 50 EMA, which means 50 EMA would be the target, and we could then go much higher or back to the previous highs. So the stochastic is pretty low on the weekly, which also only happens like March, October, and here May, which means kind of every couple of months it happens where we see this. So this likely means that we will here see a turnaround in the next maybe 1 or 2 weeks. So this was the analysis for the Nasdaq or for the US 30. So now we are going to take a look at the SP 500. Since all indices tend to have a similar pattern, let's take this one. Yeah, this was the one that I used last time. So here we saw this move to this area and then we saw a drop, just as I said last time. Now on the daily we are here again at the 100 EMA, which is basically this zone here, or this area rather. So on the weekly again we are here. We dropped a little bit below the 20 EMA. Now here only once we kind of retested the or tried to retest the 50 EMA. So usually we stay at the 50 EMA levels looking at the S&P 500, but here the stochastic could still go a little bit lower, so could the CCI, which means if we draw a line here somewhere or and the next one here, well, so here could be the alignment with the 50 EMA. So basically we could still go lower, which is where we should enter or trade. So I would wait for a drop, because here again we could see this being a double bottom. Here the CCI is going higher, and usually if this cross starts being that slow, sometimes you don't even see a cross and we just suddenly turn around, which is what could happen here, that we could see a move to the higher parts that we did previously. Now let's just check what would happen if we were to enter here and target the previous size. Now 1 to 2, something like this here. So maybe we can still drop a little bit lower, which is where I would enter. So for now I would still wait a little bit and then take in. So for me now the US 30 looks better than the S&P 500. Now let's take a quick look at Nasdaq as well, since this one is also one of the indices. Now, so for example here, the first time we don't see a double bottom, but we see a move to the downside, and here this cross could also turn into a move to the downside. So technically we would here target this area once more after we break it, or if we break it. The 200 EMA day EMA would be the next target. Now for now it looks like we are going down, and since all the indicators are below the middle line, which usually indicates a bearish momentum or a move to the downside, now often what happens is that at some point we see a turnaround, and this is always the question, when will it happen? And here what rarely happens, looking at the Nasdaq, is when we go lower then we see a move at the MACD below the zero line, and then we see a crossover. So this is here what I'm waiting for. So the Nasdaq for now is for me the trade that looks well better than the US 30 or the S&P 500, which means the Nasdaq is probably the first trade that I'm going to take, maybe then the US 30. The S&P 500 I will still wait much longer, or rather wait for a much better sign. So here we would see a crossover on the MACD on a daily. Now then I would scalp it down maybe to the 4-hour chart, because here after we had here is here was the drop below the 200 EMA, which is what is happening right now. So here we had the first drop, and then we had two second drops, which formed a double bottom, and here a divergence on the MACD, and here we had the first one. So if you see a second one, maybe we could see a similar pattern, and this is where I would somewhere entry. I mean, obviously wait for a bullish sign and then go up. Now let's just quickly check the other one. So here we had a couple of drops below the 200 EMA. So here we formed quite a rather low one, and then we turned around. So here then I will look for a trend line or this bullish candlestick here. So we had these three bullish candlesticks that started the rally to the upside, which means here was a pretty bullish one above the what is it, the 20 EMA, to close almost at the 50 EMA, and then we continue to rally. So my entry point, if we were to see a pattern like this one, would be after this candlestick here, and the stop loss would be below this candlestick. Now of course you can take it as a smaller trade on the hourly chart and target a 1 to 2 risk reward ratio, or after that, since the daily chart is pretty low then, which would be around here, so you could then target much higher highs. You would have a risk reward of, well, could easily be 1 to 10, 1 to 7, 1 to 5, whatever. But so this is the trade that I'm currently looking for at Nasdaq. So the weekly chart here seems like we could also go a little bit lower, looking at the MACD and the CCI. Let's just check the stochastic real quick. So here the stochastic is pretty low, which means here we could drop a little bit lower below this. What is this, 20 line? So, and then see a turnaround, which means we are now at the 50 EMA. So we could see a drop as we did here, slightly below this 20 EMA line. Let me just quickly adjust it. So something like this. So as we did here previously, and then really to the upside. So this is the trade that I'm looking for at Nasdaq. So anyway, this was my analysis for the US 30, the S&P 500, and the Nasdaq. So thanks for watching.